Welcome back to the Market Trader 101 series. In this video, what I want to do is show you how to run a scan on a stock list that can identify basically stocks that are trending. Because for the type of strategies that we're trading, either a full collar or a covered call type position, we want stocks that are essentially bullish and that are moving upwards. So it's not always we don't typically want to start a position like that if a stock is in a strong downtrend. So at any one point in time, we need to kind of see what's at least maybe moving upwards because that'll typically give us the best bang for our initial starting position. So one thing we can do is once we've signed in, we can go to the stock menu and we're going to look at a tool called Rankers. And in there, we're going to be looking at moving averages. Now, moving average is just a smoothed mathematical calculation over a given number of stock prices. So what we want to do is see what type of moving average has crossed over. Because what the idea is that you'll take a shorter moving average and a longer moving average, and if the short one is crossing over the long one, that means price is starting to move a lot quicker in the short term, and we'll start to accelerate away from the longer moving average. So the two that I like to use are the 10 and the 30-day moving average. That's a good time frame where it's not too short but not too long in order to see a change. I'm going to choose here simple. I'm going to be using my Penny Pilot stocks list, which I created in a previous video. And what we're going to do is we're not just going to look to see where the stock has crossed over. We're going to look to see what list of stocks actually have been moving away and are probably continuing to accelerate in terms of the 10 and the 30-day moving average. So there is a choice here in the wizard. It's called the highest moving average difference. And I'm just going to look at the first 100 that come up. I'm going to click search. And when the stock list returns, okay, we can look at the table and kind of get an idea of what's happening here. So basically what it's telling us here is that the difference between the short and the long average, it's given to us as a percentage. So the largest one comes up first, which means that the short average is 35% higher than the long average, meaning that the price action of this stock has probably been picking up in the short term and it's tending to move faster. So the 10 and the 30, if you could imagine it, are starting to spread apart. And that percentage is ranked in descending order. So as we go down the list, we can see that the difference in the moving averages are getting less and less and until basically you can get down to such a small percentage where they're essentially not moving away from each other. So I think it stops here at around 3%. But let's take a look at the top, say 20 stocks and kind of see what has been moving here. And what you'll find with this type of a scan is more often than not is that it tends to be groups of stocks that tend to be moving. So typically like a sector. So if we look here, we see that a whole bunch of them right now here are these gold and mining type resource stocks. So these are really good candidates for us to enter into some sort of a bullish position because price action has been moving away and will probably continue to move upwards. So the two that actually caught my eye were these sort of fairly low price stocks here, Goldcorp and Barrick Gold. So if I can bring up the chart of the Barrick one, symbol is ABX. Just wait for the program to load up here. We know a couple of things from this right now. So this chart actually shows that the stock has actually rapidly been climbing since about the middle of January of 2016. So we've got an acceleration here in gold prices. Um, the red line here refers to the implied volatility of the options. You can see that it's actually quite high. The lowest it's ever been has been in the 30s, sitting around between 65 and 70 right here. So it's actually quite high. And we also know, because this came from our penny pilot list, that the options on this stock here are probably quite liquid. So this is a really good candidate for us to take a shot at putting on a covered call or a collar position, with the indication that the stock is probably going to continue to move higher, and or even if it does retrace slightly, it'll give us an opportunity to roll some of the options, but then we can probably be fairly certain that the stock will continue to move higher into the future. Because when things start to move in the market, these trends typically last longer than a month or so. So this is something where we're just starting to catch now a definite trend and it's moving higher. So we can go look at the option chain for this stock. Let's wait for it to come up. And ABX, I'm just going to show 999 for all strikes. And we're going to go out in time a little bit to around the 28-day mark should be good. We'll click update. And right off the bat, you'll notice that we have weekly options. And because it was a penny pilot stock, we probably expect that. And for sure, when we go and look at the option chain, we can start to see that, for example, this put here, this $12.50 strike put is trading at 49 by 55 cents. So that's 6 cents wide. So that's actually very, very good. And same thing with the calls. On the call side, 4 cents, 7 cents, 6 cents. So, well under the 10-cent mark. Um, so this is a really good candidate for us to take a look at deriving a position. So if we wanted to build a collar position on this, I would just simply put in number of shares here, and then look to buy a put and sell a call roughly equally distant apart. Um, I know because it's bullish, I'm going to go a little bit lower here. I'm going to buy the 12.5 put, which is going to cost us 52 cents. And then to offset that 52 cents, I'm going to be selling a 60-cent call at the 38 delta mark. So they're roughly about $1 apart from the current price. And if I do the risk graph, wait for it to come up, you'll see that in total, this position is going to cost us somewhere around $1,350. But our maximum profit's capped at 100, and our maximum risk is capped at minus 100. That's just for this current expiration cycle, so we would obviously have some opportunity to roll or move the options around. But you could go into this position knowing that you really won't lose a lot. You'll stand to gain essentially risk one to lose one. But because we've got very liquid option strikes and there's lots of strikes available, we should have the opportunity to start to move this position around once it gets going. So anyway, that's our current look at the risk graph. There is our options table here and sort of our entry debit and how we would get started. And yeah, so this would actually be a good entry trade to start to put on into paper trade. Well, I hope that was valuable, and I look forward to seeing you in the next video.